All right, let's cover a new spread trade I'm in now. This is the 6B, three contracts long, 6B, two contracts short, the 6E. So the British pound versus the euro. It's an interesting chart came across here. Now, I've been in this trade since this time right here. The order is showing right there at about 825-ish. So that was right in this area right here where I did go long in the spread. So what I did, going long in the spread means buying three contracts of the British pound and selling two contracts of the um, euro contract futures. And you can see the reason why I did this is twofold. First of all, we were far below the faint red line, the faint red line and the faint green dotted area. This is an oversold condition. So these are range bands. These reds up here and the green down here, that's an oversold condition. And we also had one of our oscillating indicators showing green dots, which are oversold dots I think it's just a CCI indicator. It's very simple. But also, I went long because our green dots here, this is our prediction line. This is basically an average location for this spread throughout the day. So what this is saying is on average over the last, I think we've got 15 days loaded, the spread likes to be above the yellow line. So when green dots are printing above the yellow, that means on average the spread has shown strength above the midline. The yellow line is the midline. So this is showing that we were severely oversold at the bottom and that the historical average shows it should be above the yellow. So we have a good pressure, a good point of pressure pushing this spread up historically. So I did buy it here. Now each grid space, each band here is $100 in equity. And basically, I'm just sitting on it without much heat at all. I went long here. I did not concern myself with the spread as prices were moving, and the market opened up at 9:30 here. I'm holding on for a target that is right here. Let's go here. It's $126 away from the current value of the spread, so I'm shooting for about $330 equity gain here. Now, what's interesting is if you look at the 6B, so this is the chart of the 6B, we're actually losing $581 because I went long three contracts in the 6B here, and that was a big loser. But the truth is that the 6E went down as well as the 6B. So we are $219 above the losing position of the 581. So the net gain of adding the 6E position to the 6B position shows that we are positive. So it's very simple in that idea. You're long one, short another, and the blue lines here, the blue price bars, are actually the net equity difference between those two. And I'm holding on for target at the midline. Midline is usually a good exit location. Certainly, we could hold on if we were feeling, if the market moved, we would be holding on to these red areas, which are basically a standard deviation above the midline. And that could be a good target as well. I'm not going to be greedy here. I am going to get out at about $119 away from current value. And so that's my spread trade today, doing very well. I did have some trades in the copper market, so I did pretty well just trading outright in copper. But this was a trade that I was setting up right about this point in time. This was about 8:40, 8:50 in the morning. I saw a good move upward in this spread. This is, of course, the long copper short silver spread. And I actually, you see my entry line, this is my entry line. I wanted to go short at that level, so I did have the spread trader engaged. It never hit my target, unfortunately, because this spread just followed the prediction really, really well. So we were going to go short up here. I just missed the fill on that. We were overbought. I was printing my overbought cycle dots. And as you can see, when the market opened up, right at that time frame, we followed the prediction pretty well here. So the prediction line again is this red dotted line. It shows weakness in this spread historically over the last 15 days in comparison with the yellow midline. Again, this is the midline price of the spread, the daily high, daily low divided by 2. And each band here, the $500 equity change, this is a heavyweight spread. This is two metals, copper and silver. And would have been a nice trade had I gotten filled, but I was getting a little stingy. I wanted to make sure that we didn't give away the farm. Went short at the right spot. It just never got filled, but this was a great setup that I just missed today. Ideally, I like to trade this high, this low, this high, this low. I would have gone short right about that area. That was a pretty volatile time in these metals today. But I like to sell below a break of that strong low. So right here, this candle is a strong low because we pushed to new highs. Going short there was a good idea. I was being a little stingy and I wanted to limit in and go short up there. Again, never got filled, but you can see that the historical prediction is following pretty well. So it was supposed to be down below the midline, and that's exactly where we're at right now. So this was a 500,000, 1,500, $2,000 move from up here down to here. Um, but not today. So maybe we'll catch it in the future. All right. Thanks again. If you have any questions, I'm gaining some ground in my other spread, which I am in long. But if you have any questions, I'd love to hear your comments. Thanks. All right, everybody. Hey, good news. Just got tagged out on my exit. As you can see, the spread did move up into my sell limit order here, and I am out with a good profit. Came up with about 300 and some dollars from the entry. One, two, three. Now there's slippage involved. That's one of the downsides of trading spreads. You're trading on a market orders. And when you're trading that of size, like 3 contracts and 2 contracts here, 5 contracts, exiting at market can be a little messy, but definitely good. I did a good trade today. I'm happy with it. And all right, so I just wanted to let you know that the trade did get closed out. I'm up a little over 300. I think I was up 350, and all as looking good.